Well, hello, everyone. This is Wilson Cole. I'm president of Adams, Evans, and Ross. And recently I did a webinar that was attended by quite a few folks in the industry, and thank you for that. But it was on how to set and maintain credit lines. And for those of you who didn't get a chance to see it, or sometimes you start a webinar and for whatever reason the phone rings and you have the fire of the day and you had to log out, I wanted to cover very briefly the 5 things that you need to do to set up credit lines. Because here's the deal, and this is speaking predominantly to my contract and to our staffing clients, not as much on direct hire. We were going to cover some webinars later this year on some things that are directly specific to you guys. But if you're extending out credit, you're in essence loaning money. Now, it may be at a very high interest rate when you factor in your margin, but you're in essence loaning money. And so you need to treat it as such. So the 5 points that you need to be able to do is to set up a credit line is base it on the client's need, base it on their credit worthiness, not on the client's need. If you called your credit card company and said, gee, I'm going out of country and I've got a $5,000 credit line, I want a $40,000 credit line because I may need it, your need is irrelevant. They're going to look at your credit history, and you need to do the same thing. A lot of times, if somebody picks up the phone and calls you and they say, hey, I need staffing, can you send over 5 folks and I'm going to need them for the next month, you just extended 10,000 plus or more in accounts receivable. So if somebody had reached out to you and said, hey, would you loan me $10,000? You probably would have hung up the phone, laughed, and moved on. So the 5 things that you need to do is get a credit application filled out by the debtor. This is what we want to see, the 3 trade references in the bank. Number 2, you want to check those 3 trade references in a bank, because that's going to be how you set up credit lines. You're going to call out, see what the average credit of those vendors are. Also understand that you are probably going to get paid a lot slower than the 3 or 4 folks that they give you, because those are their primary vendors that keep their doors open. And you very well may be a 3rd tier vendor to them, or you may very well be one of those as well. But just as a thought, just staffing typically gets paid a little slower. Also, verify how much money they have in their bank. And in the webinar we go through in detail, there's a couple of different techniques. One is pick up the phone, call. The other is to, if you have their account number, see if a $10,000 or a $20,000 or a $100,000 check will clear. Because if a company is going to have a $30,000 credit line with you and they only have $5,000 in the bank, mathematically they'll never be able to pay you off. So get a credit application signed, get it filled out, and check it. 3rd thing that you want to do is pull a commercial credit report, whether you utilize us, Experian, Dun & Bradstreet, and you say, well, Wilson, you just told me to get 3 trade references in a bank. Why do I need to pull the other? Because it's the other side of the coin. It's going to check public records. It's going to check lawsuits. It's going to let you know if things have gone bad. Staff in recruiting firms don't show up on credit report that they're paying you 90 days late. When was the last time somebody didn't pay you? You picked up Dun & Bradstreet and said, hey, this company is paying me 90 days late. You don't do that. No one does. But where you show up is when you turn them over to collections or when you sue them. Those are going to be collections and public records that get picked up. The 4th thing you want to do is you want to have a system to where you can retrieve the file and things on those lines, to where if for whatever reason you need to go back and check those 3 trades in a bank. And that's actually ties into the 5th thing that you want to do is recheck credit every 6 to 12 months. In business, especially with closely held companies, they can be insanely profitable. They can be a great credit risk. But let's say the owner dies, leaves the business to his children, or the principals split through a divorce or a partnership. All of a sudden, a once vibrant company all of a sudden is suffering from some cash flow issues. So you want to go through and recheck every 6 to 12 months that credit. And that's where those 3 trades in a bank really come into play, because unless they're an absolute moron, when they initially give you those 3 trade references, they're going to be 3 folks that they're definitely paying. 6 months or a year from now, that may be slightly different. And so if you also see where maybe their payments are starting to slow down, dust off that credit file and revisit it. So make sure that you get a credit application filled out. Make sure you check the credit application. Make sure that you run a commercial business credit report. And then you also want to be able to find a said credit report. And that's so much easier today than it was 30 years ago. You can attach it to the file in the CRM, and it's there forever. And then also recheck credit every 12 months. A minimum on privately held companies. Now, in the webinar, we went through in detail how to categorize and how to segment which ones to check and things on those lines. But those were the 5 major points of what you need to do to set and maintain credit lines. And as a bonus thing that you need to do, since you've watched the end of this video, is have some type of trigger mechanism. If you set up a credit line that's $10,000 and all of a sudden they're up at $20,000 or something on those lines, you need to have a trigger to where you actively reach out to the debtor and let them know that they need to pay their invoices, even if they're not due. And this is using the credit card analogy, as if you have a $5,000 credit line and all of a sudden you're up to $5,000, nothing else is going to charge till you pay it down. It may not be due, but you have to pay it down. Your credit line needs to be the same way. Set up the credit line based on their ability to pay, not for the need for their services. If you want to set up a time to discuss an appointment with myself or one of our staff attorneys, please visit our website at staffingdebt.com and just click 30-minute consultation, and we can discuss your collection issues in detail. Thank you. Hey guys, it's Wilson again, and this video was brought to you by Adams, Evans, and Ross. And if you like the video, please make sure that you click on the subscribe button and also like the video. If you have any questions or comments, please leave those below as well. If you'd like to learn more about our company, please visit our website at staffingdebt.com. And also remember, if there's no collection, there's absolutely no cost at all.